All right, we're back. Tasty Crypto Show. I'm Ryan Grayson. With me today, of course, Shelly Van, Dan, Cecilia. Full strength here in the cave. And we got the chat popping as well. If you're not on the Tasty Live YouTube, get over to YouTube, go to Tasty Live, and type some crazy shit into the chat. What's up, my friends?
It's October.
Need like a sound effect for that. There you go. Dan's got it. It is October. How much? Yeah, all right. Yeah. Nice. Like a golf clap for October, you know? Not a quiet start, though, to the markets for the month. What are we up in Bitcoin right now? It's been a nice move back to like 117. I don't know if you guys have it on your screens percentage-wise. I'm trying to get organized over here.
I do not, but I think
7-day percentage return on Bitcoin. We're up 3.5%.
Nice. It feels good, doesn't it?
30-day 8%, 1 year 93%. Does feel good.
How's the chat feeling about October? Let us know. Yeah, I've got Sui up 8%, Aptos kind of getting off the floor as well, 7.5%. XLM, which by the way, I believe XLM Stellar Lumens transfers are now live in the platform in addition to XRP. So if you want to transfer either of those assets, you can do so. But yeah, green on the screen across the board here, guys. Good start to the month after what was kind of a quiet September up until recently.
Yeah. People were starting to give me dirty looks like they were doubting me, and I was like, give it time, friends, give it time.
It is tough, right? I mean, you can obviously trade futures both ways, and there's some leverage there. You have the listed products through the CME. You can trade those here through Tasty Trade. We are typically active in the spot markets. We'll trade the ETFs like IBIT, ETH, some options there. The market's maturing too. I mean, when we were doing this a year ago, you really didn't have the options on the ETFs that you have today. And when they did come out, they weren't that liquid. But yeah, it is a challenge at times when the market isn't doing what we like, right? You've got this long only, unlevered spot product that I think from a long-term investment perspective makes a lot of sense, at least in my opinion. But day to day, yeah, if you don't get the volatility, it can get a little boring.
Yeah.
What do you guys do when Bitcoin's not going up 5% each day?
I mean, go to the trenches. That's where I'm at.
What are you trading right now?
Well, Dan and I are in punk strategy.
Do tell. Well, I'm not in this.
Ooh. What are we up?
What are we up on Punkster?
Percentage-wise.
Let me look it up real quick.
Yeah, we definitely don't have this on Tasty Trade yet, but if
But if you're asking me what I do as a crypto person, like...
I'm going to go to CoinMarketCap and take a look at this.
Yeah.
So Punk Strategy on CoinGecko is up 187% in 7 days.
In 7 days. And when did we get in? Like 2 or 3 weeks ago?
Yeah.
What's the symbol here?
ENKSTR.
STR, okay. This one?
This one.
14 cents? Oh my God, it was at 12 cents, I think, when you guys had talked about this earlier.
We got in at a penny.
Wow.
Yeah,
All right, so explain this one to me and to everybody else.
Punk Strategy is basically a play on MicroStrategy, Michael Saylor's MicroStrategy for CryptoPunks. If people aren't familiar, CryptoPunks are the most valuable NFT on ETH in the entire space, actually, the most valuable NFT.
The first.
One of the first, not the first,
okay,
but one of the first. And basically what this mechanism does is they created this token, they launched this token, the fees generated from trading this token are being used to buy CryptoPunk NFTs, list them at 1.2 times the floor price. When they sell, they'll take that ETH, buy the token, and burn it. So there's this mechanism where people are betting, there's fees that are generated from trading are being used to accumulate this valuable asset punks. The previous assets they hold, they're kind of like relisting it, so it's the floor is increasing as they earn more, and then as they sell out, they're taking the money that they earn and going back to the token, buying it, and reducing supply. So
it's this perpetual machine to keep the floor on the punks
Now, let
like
me
moving.
And you guys bought this at, when did you buy this? It's been out for, it appears, like a month.
Yeah, we talked about it on Beans, and we got in around a penny.
That's where the real alpha is on Beans.
Yeah, it really is. If you guys want to know what's going on in the space, let me read this.
So you guys were in back like a couple weeks ago and just had the explosion here, October, to start the month.
Uh-huh.
Everything's moving higher. Nice trade. And you guys are good.
Thank you.
Thank you.
Yeah. How'd you find out about this? Aside from like anyone can find out about it if they watch you on Beans, but where do you guys get your
Dan's
alpha?
a punk holder. We don't like give him enough flowers.
He's in the know.
Yeah.
He's in the club.
Twitter and Telegram.
Okay.
So let me just read this real quick. So there's 4 parts to it. They call it the yo-yo, a simple mechanism for buying and selling punks while burning token supply. 10% of each trade of Punkster, the token, $Punkster, is taken as a fee and stored in the protocol. They take a 2% rake, so 2% house fee. When there's enough fees in the pool, the machine buys a floor punk. The punk automatically gets listed for 1.2 times the price. When the punk is sold, all of the ETH buys and burns the token. And it just perpetually does this.
No manual. It's all in the smart contract, or actually the UniSwap V4 hooks.
Okay.
That's how, so it's all just automatic in perpetuity.
Kind of puts this bid, I suppose, into CryptoPunks NFTs, blue chip NFTs.
Because they also did it for apes, Meebits, a bunch of the blue chips.
Moonbirds, yeah.
Yeah.
Okay.
Cryptos.
Pudgies.
I have a shout out. Jose, when is Ryan going to make appearance on Beans? Well,
Dan's going to be gone.
the
so
perfect
Ryan,
time would be Friday or next
week.
Friday. So
I'll be there. I can do that.
Sweet.
Yeah. Yeah, Jose, when am I going to be invited on Beans is the question.
Aw. Ryan, will you come on Beans with me next week?
Yes.
I might need to show you how to.
Yeah, there's some.
There's a different technical setup over there.
Yeah.
Oh yeah. Now you guys are streaming every Friday on the Tasty Crypto YouTube channel, which I don't know if everybody knows this or not. I'm sure those that are, I guess, like the diehard viewers, which thank you, by the way, everybody that shows up here and types in the chat and joins us on the show week in and week out. Thank you guys. So I'm sure you're familiar with this, but if you're just joining, there's an entire crypto channel for Tasty, which is Tasty Crypto on YouTube. Get over there and you can watch Beans every Friday. Awesome. Well, we got some alpha to start the show. Guys, I've put together a couple of slides and then we can go anywhere as well. We've had a great start to the month. The month is October. We've talked about this, I think, previously on air. I introduced this concept to Tony Batista earlier. It's a lot of fun to talk about this, and this is the, I suppose, seasonal component to crypto markets that we've observed. I've got to caveat that with there's not a very long time frame that we look at, right? It's 10 years, which is a very short period of time relative to many other assets. So when we look at the seasonality, like take that with a grain of salt. Past performance is not indicative of future results, obviously, as we like to say with a disclaimer. But there might be something to this, and we're going to go through the slides. I want to talk about this. Stop me at any point if you have some questions. If anybody in the chat has a question, you know what to do. But October 1st, maybe coincidentally, we've started the month off with a nice rally here in the market, and that's a continuation of what we saw earlier this week, really just to start the week, where we've seen Bitcoin now trade from, let's say, sub 110 back to closer to 120. I think we're at like 117. So we'll see if we have legs here. Nice short-term trade, if not. But October, what do we mean by that? Well, when we look at the last 10 years of price action, and again, we have to consider that we've had an asset that at one point was pennies on the dollar and it's now $100,000 or more. So you get these very large percentage moves which can skew it at times. But when we look at the last 10 years, there seems to be a bit of a seasonal component to Bitcoin price performance in the fourth quarter of each year, with October over that 10-year period being by far the best performing month. You apparently want to own Bitcoin in October. September tends to be one of the worst performing months. There's the only one here in the 10-year data set where we have a negative return pretty consistently here in September. And August is somewhat muted, June, March. If you've been in this long enough, you know that obviously this has been a great performing asset. But September tends to be down, and then you get October here, where on average, we've gone up 20% when you look at the last 10 years. Do you think it continues?
Hell yes.
Okay.
Yeah, I mean, I think all the signs are pointing to this trend continuing. Maybe not as much as in previous cycles, because obviously the market structure changes over time. But can't argue with that chart.
So to your point, Dan, let's zoom in to the last 5 years. Let's go back to 2020, and you'll see that returns have changed. To some extent, we've got a few more months here where you've had a negative return over the last 5-year period. Market structures changed, participants have changed as well versus where we were, and certainly the price is a lot higher over time. But you still, again, observe that seasonal component here in the fourth quarter of the year. October, even when looking at the last 5 years, is the best performing month on average, up 17% versus the 20% over the 10-year period. But November and December into the end of the year perform pretty well. And even if you go and now look at the start of the year, right, it's possible that we have another couple of quarters in front of us, another 6 months, where we could get decent returns if, big if here, all caps, this follows kind of the historical patterns that we've observed. But we do see that, right? I mean, when you look at the cycles, we've done some of the analysis on the show. You look at the 4-year post-halving cycle when we look at Bitcoin, right? And this is only looking at Bitcoin here for the seasonality chart. But mathematically, they're almost perfect. The drawdowns in terms of the size of the magnitude of the move, or the drawdown of the magnitude of the move on average from trough to peak over those 4-year cycles throughout history has been about 74%. So what I mean by that is, the size of the whole cycle, the up move in terms of the magnitude of that move has declined by about 70%, 74% each cycle. We've done some shows previously looking at where it could go if it plays out the same way.
Explain that. You're saying that like the volatility has kind of come in on it.
So volatility has come down, but what's also interesting to me, fascinating maybe, is when you look at all of the Bitcoin cycles, you measure that 4-year period post-halving, and in each one of those post-halving cycles, you look at what was the size of the return ultimately from that point in time to the peak in the cycle. Now, at the end of the year, at the end of the 4-year period, it might have been a lot lower. It might not have been anywhere near where the peak was, of course. But if you just measure the size of the peak, and then you look at each one of those cycles, the magnitude of that move from the halving to the peak is about 74% lower each cycle. So, it could have been thousands of percentage points initially when the price of Bitcoin was very low around the first or second halving. But as you've moved forward through time, that peak is much lower. Let's just make something up and say it was, it's 150%, which was a 74% decline from the size of the peak before.
Gotcha.
So we did this analysis. I did this with Mad Mike a long time ago, and Frank on the show as well. I think you can still find this on the tastycrypto channel. But we looked at, all right, if this happens again and it plays out, you go back to the post-halving period back in, I think it was April 2024 or 2023, one of the two. How far? We're 2 years past the halving?
Oh, you have parent brain, don't you?
I do, yeah. I haven't gotten much sleep recently. I'm sorry. Whenever the last halving was, apologies, I remember it was in April, just not the year. We did this show, and we looked at then, okay, what would it imply if you were to extrapolate this? And at the time, we were using like a $60,000 Bitcoin price. So it must have been just last year.
It must have been, yeah.
You get close to like 180,000 on Bitcoin. Then he did the same thing for ETH, and it got a little silly.
Say that louder.
Yeah, like 160,000, 180, somewhere like 170, give or take, depending on what the starting price was. It was pretty volatile at the time. But the ETH move is crazy. I'll force you to go watch the episode if you want to see what the ETH move was.
We'll share it.
It's fun, at the very least. But yeah, that said, again, that is what you see in these cycles. And so if we're still in that period right now, where you're in a bull market, maybe there's a few more months ahead of us here, but October tends to be Uptober, or at least it has historically. So wanted to point this out as we start the month. That said, what else should we expect? So 2 more slides to go through here. When you think about dips and opportunities to take advantage of, if we're in that period, we're still going to experience some volatility. What does that look like historically? So we're looking at inter-month drawdowns only for Q4. So we've isolated October, November, December here, going back over the last 5 years, looking at each one of those months in each year, and looking at what was the largest drawdown and win to just get a sense of like how this trades and what you might expect. And so the largest drawdown was 32% in December of 2021, and then in November 2022, I think this was around FTX collapse, you got a 30% drawdown in the price, which also aligns with what we've seen historically throughout bull markets, where your pullbacks in Bitcoin have been 25, 30%. Those have been real buyable dips if, in fact, we're still in that structural bear market, which is, again, what we saw if you go back to, I think, April of this year, where we pulled back from like 110 to 75,000. Roughly a 30% drawdown in the price of Bitcoin. Great buying opportunity if you stepped into the market at the time. What happens more frequently, though, are drawdowns in the range of, let's call it 10 to 15%. So I think, again, as long as we recognize that we're still structurally within a bull market, which I think there's a lot of signs that we are, you get a 10 to 15% drawdown and it doesn't materialize into anything larger, that tends to be a pretty buyable dip. Maybe you wait. If it's down 15, it's down 20%, you wait. Does it start to recover? That might be the signal. But this is what we've seen historically in the fourth quarter. So while we're all bullish on October going up 20 to whatever percent on average, you do get volatility to the downside. And this in general is what you could expect. On the upside, these are the moves that you could also look for if you're trading this and, you want to put realistic expectations around something. I bought the dip. It's ripping higher. Does it triple? Does it quadruple? No. Some of the biggest moves going back in time, and we had a much lower price, and obviously you had some COVID dynamics early on in the 2020s. 66.9% was your biggest move. More recently, though, almost a 50% move in November of 2024. And if you go back to the chart there, you'll see that Bitcoin was, about 60-some thousand and went up to 90-some thousand and ultimately went higher and pulled back to 75 or so, like we mentioned. But 60 to 90 gets you your roughly 50% move. Wouldn't that be crazy? November, I don't think it repeats, right? But you've seen a lot of kind of consistent upside volatility here too. So you look at that October period, October 2024, 25% move, followed by a 50% move in November. October 2023, 30% move to the upside. October 21, 50% move to the upside. You guys think we get a 50% move to the upside this month? 150, 160 on Bitcoin? We hit that target? I'm not holding you to this. Shelly's like higher.
Shelly's like, yeah, we're going to 180. What's the setup? What's the setup this month that could
affect that?
Push that?
Yeah.
Wrote about this to really high level to some extent this morning in the market update. In my opinion, from what I kind of look at, what I read, what I try to synthesize as well from many people that are much smarter than I am, is that we're either in or entering into an environment in which is generally pretty supportive when you look at the economy. I know there's probably some random ass headlines out there today about the government shutdown and all these things that you absolutely should just ignore unless you think the United States government's going to be shut down into perpetuity. I don't. But don't get distracted by that. There's been a lot of bearishness at times. I think a lot of people too look at these moves in gold and equities. They're at all-time highs. There's some, kind of stretched valuations in some areas of the market, and people just wonder how much longer can it continue. Well, first of all, you make money in the bubbles on the upside. You got to get out. You can't be too greedy. You got to take profits at some point. But I think you want to ride that wave. That said, you have the Fed that's cutting here. In terms of the projections, we're looking at a 90% or so probability of another 25 basis point cut at the next meeting, and then another cut this year. Following that, you could get back down to if we say inflation's about 3% or so, a somewhat neutral rate, 3% of Fed funds, I think it's probably your target there. So point being, like everything I look at in terms of economic data, starting to see an acceleration in both growth and inflation metrics. We had ISM manufacturing today starting to tick higher. You want to see that in expansionary territory, which is going to be above 50. You're going to get services on Friday. Labor market's been a little shaky at times. So we got NFP, non-farm payrolls here, the jobs report on Friday as well. But like generally, some of the things that we're seeing, and there's a lot of different ways that you can slice this, but you look at durable goods recently, you're just starting to see a number of signs of acceleration of economic growth and inflation. It tends to be a great environment for crypto. Tends to be a great environment for tech stocks, long duration assets. I think it tends to be a good environment for commodities too. So we'll see. But if in fact we're in that environment that's generally positive or constructive, and the Fed is cutting into that, and we move away from like some concern that the Fed is cutting because things are really slowing down, and it's more of like this, soft landing, they're going to land the plane perfectly sort of thing, then I really think you could see a lot of people jump back into the market. We've just looked at seasonally a period of time where the summer tends to be underperformance at times in September. We also know that historically, if you have a positive September, which I think we were kind of right near there, October's even better, or the fourth quarter is even better. I just think people have been like too bearish, or maybe more so, too apathetic. People might care again. I talked about this on Monday, but look at the index for Bitcoin, or pick your other favorite crypto term in terms of Google search trends. Nobody cares, guys.
But
there's no FOMO. Like, who's talking about it?
But we talked about this too. If you want to hop in too, but like we talked about this where this cycle, in my opinion, is a cycle of like institutions and bigger flows, right? Like previous cycles, I feel like the massive run up, this kind of like FOMO spike in prices was retail driven. And I feel like this cycle with the Bitcoin ETF, with some of the ETH ETFs, MicroStrategy, this like public market or like legitimate way of accessing the asset class, it dampens the like volatility, even though flows move into the space. So yeah, I mean, people might not care from the retail standpoint, but it seems like our bigger asset managers are,
Mm-hmm.
And I think that's what you need to see, right? To your point, it might not be as volatile. And so maybe we don't get these moves. But I would still take, just to get you to some of these levels where you've had a great month, right? 10%, 15%, 20%. It's definitely not that 50% move in November, but think about the price at the time, right? We're talking about something that was $60,000 here versus something that's 120, 110, 100. You get one of these moves that we've historically realized at this point. And again, you want to take profits, I think, at the end of all of this, right? We're going to do a show where we're probably talking about taking money off of the table, if you haven't already, into some of these up moves. But off of that $100,000 base, you do get to new all-time highs if we see this play out. And again, this does not at all mean that it's going to repeat. You could have a negative Q4. Who knows? We're just looking back at the data that we do have, and it is interesting enough. But I think to your point, Dan, so volatility comes down. But I think in order for the crypto market to get to, in terms of total market cap, to these new highs, you obviously have to have these bigger pools of capital that are entering into the space, these institutions, whether it's larger funds or it's kind of from the sovereign bid, if it's countries that are looking to allocate. And I'm sure that some in the shadows already are, right? You see the bid in gold, and some of this is just driven by rates in the dollar. But I think that's where it comes from. So you might have less volatility, but you get to much, much higher prices because there's bigger inflows. We're seeing those billion-dollar inflows into the ETF complex on sometimes daily.
I have someone in the chat, Mauser. What month did the government give its blessing to the crypto ETFs? I don't know if he means like SEC approval, but
yeah, I don't know if it's the approval or the launch. Let me do a quick.
2024, wasn't it?
2024, I think we launched like right around January was the launch, or I don't know. We're gonna have to go to Google.
Let's go to
this
Google.
one. Yeah. I don't know if you want to take a look.
Yeah.
I'll see what I can pull up here. Yeah, it's a good question. Yeah, I think it was January 2024.
January 10th, 2024 was the launch. They officially approved several spot Bitcoin ETFs January 10th, 2024. Yeah. Yep.
Yeah, I mean, I think there's going to be less volatility, and you're definitely not going to see the same upside returns. It's going to dampen over time. But I think there's still, a bullish trend that's clearly in play here. And I think back to some of the headlines that we've seen recently. We get super excited about them, and then we completely forget that they happened. For example, 401k plans can invest in alternative assets, real estate, private equity, crypto, right? And that's where the majority of the funds are going to go into. That doesn't happen immediately, and it doesn't happen across all 401k plans. But when you start to hook more of these pipes up for capital flows, it has an impact over time. Same thing with the ETFs, right? ETFs launch, I believe if I'm correct, if I recall correctly, bid in the market leading up to that point. ETFs launch, there's probably a big correction afterwards.
That's what I mean. So here's an interesting point. Flower Power 222. I really want to go bullish on Circle stock, as I feel it's going to be over $1,000 sometimes in the future. Just don't know when to buy big or just DCA in. What do you guys think? And you just mentioned blow up. This to me is one of the same trades as Coinbase stock last cycle. Coinbase stock went public at I think it was $300 a share, somewhere around there. And then it trades, all this mania trades up until 2021, 2022. It crashed to $50, $40, $50 in the depths of the bear. And I just feel like, it's a similar thing, right? Stable coins is the hot narrative this cycle. Circle's a stable coin stock. Well, it went live, and what did it do? It traded up to $250. I mean, it's down to $130. I mean, I don't see why you wouldn't nibble. You can nibble a little bit here, but I wouldn't empty your clip into Circle. It's only been public for 3 months? Not even.
If you haven't had it already, there's going to be an unlock where you could get some selling pressure there from insiders. I don't know if that's happened or not yet. I think that typically 90 days or more.
Go out a year. Go out a year in the options and just, I don't know. Let's just see.
Yeah, let's just look at a little bit more than a year here, but basically December 2026. All right, I don't think Circle's a zero.
No.
It would be odd. Something went horribly wrong. There is an interest rate component to this, right? So when you think about the business, Circle is going to issue stable coins. They don't pass that yield on necessarily, at least not directly to users. If they have a relationship or partnership with Coinbase, so if you hold USDC with Coinbase, you're going to get 4.5%. That's going to come down as Fed funds come down. So point being is this impacts their margins. They're less profitable from an interest rate perspective, right? If rates are just zero and they stay there, Circle's probably less interesting to people, though they maybe figure out a way to generate fees. But the lowest strike that I can see here, if this is looking at all of the strikes, I think we've got all the strikes up here. But I've got a 60 strike, and it's about $6. And so if you sell that, that's going to be a buying power. Let me get the shares off there. Apologies. Sell the 60 strike. My buying power reduction here in a margin account at Tasty Trade is about $1,600. And I'm going to bring in, and we'll just use the bid here that you would sell at if you wanted to be filled immediately. You could probably work this at $6 at the mid price. So you're going to bring in $500 to $600 depending on where you get filled if you were to get filled there. Not bad against a margin requirement of about $1,600. Now, you're going to hold this position to realize the full profit. Obviously, you could make some money here if the price just absolutely ripped higher. You'd see that option trade a little bit cheaper, but it's not going to lose all its value because there's a lot of time premium in here at 443 days. So you're locking up capital for a long time. But as an example, that's one way where you could have that bullish exposure. We're looking at the 8 delta. Maybe you want to be a little bit more aggressive because the stock's at 128, 130 right now. But maybe you think, I would like to buy Circle at $100 a share. I'm bullish on Circle. Well, you get paid almost $2,000 against a $3,700, $3,800 buying power requirement here to put that on with like a 400-day duration. You can move this around clearly, and you can look at, okay, the next 16 days. I don't think it's going to go to 100 in the next 16 days. Crazy things have happened, though. But if it doesn't go to 100 in the next 16 days, if you want to buy it there, you do have a similar buying power reduction, obviously. But you're going to bring in $58 in premium. And you can just do that every week at the $100 strike. You're going to get paid less if it does go higher, right? So you could have that Delta 1 component where you just long the shares. But there's a lot of ways to do this in addition to dollar cost averaging. You can do this with other crypto-related stocks as well.
We're not able to share watch lists across different accounts, are we? Because the one...
I don't think so.
You don't think so?
I don't think there's a way, at least not like as a feature. I don't think there's a way where if you built a watch list, you could send it to us, but we could put it together for people.
We should. So the last couple weeks, I don't know if we'll do it this week, but the last couple weeks, I had put together a list of all of the crypto treasury companies, the DATs that we've been following, crypto treasury companies, and I have a watch list. And what I really want to do is I want to figure out which ones, like how to play some of these with options, because some of these are, I don't know, they're pretty rich. They might rip higher. Like this Forward Industries, for example, is accumulating over $1 billion worth of SOL. Is that a levered bet on SOL? Maybe, but it has options, or it will. UPXI, same thing. SUIG. Let's just even look at SBET, right? Like SBET is the Sharplink Gaming. Bitmine Technologies, right, is the Tom Lee one.
Yeah. You look at the vol in here, if we just use this smooth VIX style calculation, 100%, which is a hell of a lot higher than the ETH vol right now. We know realized vol is certainly not 100% in ETH.
Right. So, and I don't know how much volume there is, but if we look at that and do we sell?
I got 16.5 million shares traded today.
It's not bad.
No, options are a nickel wide.
It's pretty decent. I don't know what you would do. Maybe you sell call spreads and see. I think that these are going to blow up at some point.
Like to the upside or the downside? Both. See, when we're talking crypto blow up, what are we talking about, Shelly?
Both. So you got to play both. You got to play for that immediate short-term upside move, but then hedge yourself to the downside, because I feel like these are, what are these? These are levered bet. It's a levered bet on ETH, is what I think, right? And, maybe you have to do some analysis, get ChatGPT to dig into the financial statements and news and see if they're running.
Or watch Beans.
But are they running alpha strategies on top of this? Like, are they doing DeFi? Because a lot of these are doing leveraged DeFi strategies with the fund.
I think so. That seems to be like the value prop. Mm-hmm. Otherwise, maybe from the institutional perspective, it's just easier to buy some of these things. That said, there's ETH ETFs with options on them, so I'm not quite sure what the allure of SBET is versus an ETH ETF as an institution. But if they're able to participate on chain in ways that generate yield, then okay, makes a little bit of sense why you might pay a premium for that.
Right.
Why do you think they're going to blow up?
Well, because it's just, I don't know, it's just common. I don't know. I feel like it's just common sense.
It's over-levered.
Yeah, it just starts
at some point in the cycle.
Yeah, it starts with MicroStrategy. It's like, it's a good idea. He got, started accumulating Bitcoin. It's a great idea. And then as we see in finance, people pile onto this trade. Now we're raising for ETH. It's like, okay, ETH is not, it's not as risky. It's definitely riskier than Bitcoin, but it's not as risky as some of these other ones. But we've interviewed the guy from SUI. That's a newer token. I'm not saying what he's doing is, I'm not saying what he's doing is...
You're just saying that, like, look, there's risk here. There's company-specific risk. There's strategy-specific risk versus owning the underlying asset in this case. Similar to, like, okay, you got gold miners.
Yeah, and, like, I think, I interviewed the Athena stablecoin one on last Wednesday, and, he talks about a beta and an alpha component. It's a SPAC. They raised $890 million. There's some other things they're doing, right? They're participating in the protocol. They're governing. It's not necessarily that it's just like some hedge fund. It's just that he talked about a beta and alpha component to the trade. And the alpha component is going out and doing yield strategies. And the Athena protocol, if people don't know, is a yield-bearing stablecoin, and the yield comes from the carry trade. Carry trades, they work and they're very common, but they do blow up. It's so my point is that it's leverage on leverage, and some of this doesn't. If you're a crypto native, just buy the token, right?
Yeah.
So it doesn't seem sustainable, is what I'm trying to say. If I'm just using heuristics, that's all.
Shelly, we're going to give you the last word here. We've run quite over, so apologies to the production team, but thank you for giving us the time here today. I think we had a great show. There's a lot going on. Mm-hmm. It is October, after all. What are you seeing in the market? Where's the alpha? What are your alpha yield strategies?
Oh, good grief. I'm watching a lot of things in DeFi and, again, in the trenches, but I'm very excited that we now offer UniSwap at tastytrade.
Yes.
Good call out.
That's one of my favorite trades.
Yeah, UniSwap launched yesterday alongside Arbitrum and BAT. We had a couple little bugs we had to fix, but I think that should be good to go now. If not, we'll have that this week. And then also XRP and XLM transfers now live. Mm-hmm. Awesome. Well, guys, thanks for joining me here in the cave. Thank you all for tuning in, watching the show, and joining us
we'll be back
in the
tomorrow
chat.
at 3.
Oh, that's right. It's Crypto Week.
It's Crypto
How
Week.
could I forget? We're here all week. I'll be on Beans, and we'll be back tomorrow at 3 o'clock. New time. Same show. Same alpha. More alpha.
More alpha.
New time. Shelly and I will be back. But until then, I'm Ryan.
I'm Shelly.
I'm Dan.
Peace.